Well, more now on the high drama over Greece's debt crisis. Protests have shut down much of the country, as you saw earlier, as Prime Minister George Papandreou tries to push huge budget cuts through Parliament over the next few days. For more, we are joined from Valley Forge, Pennsylvania, by Jonathan Lemco. He's a sovereign credit analyst at Vanguard. Jonathan, good to see you back here on our program again.
Pleasure to be here.
And things only seem to be getting worse and worse for Greece. Do you think these austerity measures are going to pass?
Best guess is yes, they'll pass. You know, the legislature's got 305 seats. The government controls 155. There's some risk that a couple of those deputies might backtrack and vote against, but best guess is they won't. So by a very small thread, yes, it'll pass, I think.
It'll pass and prevent a default, or it'll pass and then what?
It'll pass and for now prevent a default, but more importantly for now, it'll pass and in turn Greece will be entitled to the next tranche of money from the EU and the IMF, which keeps it going for another few weeks or so. Right. So we in the market, and Greece especially, gets a respite.
Right, for now, and I hear that phrase over and over again, right, when we talk about Greece, for now. When does it stop?
It just doesn't go away.
Yeah, well, but Jonathan, so when does it stop?
Well, you know what, you see, all the austerity isn't enough. If this only stops when Greece gets meaningful domestic and international investment, and which in turn will promote growth. That means, to some extent, it has to privatize further. It means it has to collect a lot more revenue from the rich. But most importantly, it means that investors and companies worldwide have to see that there's some promise in Greece, there's some good things in Greece, and it's worth investing in. Until there's that changing sentiment, I don't think this gets any better.
But Jonathan, do you see
right now,
no, go ahead.
Well, Greece is recording zero or almost negative growth at this point. It's got to get 4 or 5% growth a year. It's got to get jobs. There's so much has to come. And austerity by itself just isn't enough. In fact, in the midst of austerity, that hurts growth.
Well, I was going to say, I mean, actually, these austerity measures are only going to plunge Greece into a deeper recession, or is it not?
That's right. You need a particular combination. You need confidence in that country. And right now, it just doesn't exist. So we need step-by-step incremental improvement. So if it passes tomorrow, that's a small, tiny positive step. And I look forward to more positive, tiny steps going forward. But it's going to be very tough. And I think the risk of default for Greece remains very high. But you know what? Even that's not the end of the world, really, from a market perspective. It can afford to default and still remain within the EU. There's nothing that says that it has to leave the EU, and it can't be booted out of it, according to the Constitution. So it can stay within, and in turn, the rest of rich Europe, I think, will have to continue to support it going forward. You
know what's interesting, Jonathan, is that you are one of many people that have come on our program and have said the same thing, that Europe could survive a Greece default. I mean, we had Mohammed Al-Arian on who said, there could be a technical default in Greece and it would be okay, it would be contained, the contagion would not be that bad. So if that's the case, then why are these European leaders so bent on making sure that bondholders stay whole as much as possible?
Well, one, they don't want to set a precedent of any defaults if they can help it. There's the loss of face issue. But two, the bigger worry, I suppose, is how exposed European banks are, one, to Greece, but also, could this thing spread as we know? Could there be a contagion effect to Portugal and Ireland and whore of whores to Spain? And best guess is it won't, because by 3 standard deviations, Greece is worse than Ireland or Portugal. But it is possible could spread. It's unlikely, but it's possible. And European leaders know that, and they fear that. They fear perceptions by the international investment community that this could get worse and spread to other countries. So to try and cut that off at the pass, if you will, they want to stop it right at Greece.
Okay, well, clearly there are no easy answers to this, but as we're watching all of this unfold. Right. Jonathan, great to have you with us on our program. Jonathan Lemco, Vanguard.